Welcome back. Shares of Core Scientific, a cryptocurrency miner, have roughly tripled since the start of 2024 to the current share price of about $10.25 per share. Less than 2 years ago, Core Scientific filed for bankruptcy protection. Let's talk to the CEO right now, and we'll talk about where the company has been and where it's going. Adam Sullivan is the Chief Executive Officer of Core Scientific, and he joins us now. Adam, thanks for joining us. The company's been through a lot in the past couple of years. Bankruptcy protection at some point in 2022, a return to public markets very early this year in 2024. What made the company confident it was ready again to trade on public markets?
Yeah, absolutely, and thank you for having me on. You know, our company, we solve for high-powered digital infrastructure, and we've done it for emerging technologies in our past, and that's mainly been focused on Bitcoin mining. And we knew in January of this year when we emerged, we had an incredible opportunity ahead of us on the high-performance computing side, and that's what you've seen from us this year. You know, we still maintain one of the largest positions in terms of Bitcoin mining companies, but we've also added on some of the largest hosting contracts for high-performance computing in the entire data center industry.
Were you with the company when it filed for bankruptcy protection?
I was not. I joined about 5 months into the Chapter 11 process.
Okay. The media coverage at that time said that the company was over-indebted, over-leveraged, and not prepared for higher energy costs. Has the company addressed those potential weak points?
Yeah, absolutely. Really what it was a capital structure issue. There was no issues on the operation side. But when you take on short-term amortizing debt in a very volatile industry like Bitcoin mining, that can cause mismatches in terms of your interest expense versus your cash flows. And when you have that high interest on a short-term basis, that can cause near-term issues. And so that type of debt might be better for a high free cash flowing business. But for Bitcoin mining, given the volatility and not sure how long those cycles may last, but knowing you're going to have a cycle every year, you really want to structure that on a much longer term basis. And that's what you saw with our capital structure from emergence, much longer dated and optionality built into our capital structure. That's what you've seen from us this year. We've been able to execute very well. We've actually been able to recapitalize our entire balance sheet as of just about a week ago via another capital raise. And so we've put ourselves in a very strong position moving forward.
Right. I'm seeing, I think what you've just referred to is that $267 million in debt being repaid. Is that and that came after a convertible senior notes offering. Is that what you're referring to?
Yeah, absolutely right. So we raised $460 million via convertible note, and it's allowed us to remove all of the restrictive covenants, all of the collateral requirements from all of the debt from our Chapter 11 process. So really, as of last week, we're a completely new and fresh company.
Okay, tell us what the company does. Is Bitcoin mining the core mission of Core Scientific?
So Core Scientific, dating back to 2017, we've been both a Bitcoin mining company, but we've also solved for high-powered digital infrastructure for emerging technologies like GPU hosting. So we are actually one of the largest GPU hosting companies in North America, dating back to 2019. And so when you look forward to what we do today, signing some of the largest GPU hosting contracts in North America, that's just a continuation and really a showcase of the expertise of our company, which we're a Bitcoin mining company with roots in the data center industry. And so that's what differentiates us on a go-forward basis to be able to execute on these very large contracts that we're signing, where we're still going to maintain one of the leadership positions in the Bitcoin mining industry, but we're also going to be a leader in the data center industry as well.
You also mine Bitcoin for your own account. I take that to mean that you mine Bitcoin and retain it for a period of time, correct?
We actually sell on a relatively frequent basis.
Are the company's fortunes affected then by the price of Bitcoin in the open market?
It is not. So really one of our key capabilities is in our software stack and our operations capability. So we're actually able to maintain profitability even through very low parts of the cycle. And so we actually are able to maintain a very strong cash flowing business in the Bitcoin mining side, really no matter what part of the cycle is. But now we're tacking on long-term stable 12-year cash flows from the high performance computing side of our business. That's going to radically change the nature of our company, because we're going to be able to produce high free cash flow regardless of where Bitcoin is, but still maintain that Bitcoin upside by having our mining operation.
What should investors look at when the company reports financial results for signs of progress at the company? What are some of the key lines in your financial results?
Yeah, so it's not even just our financial results. It's really, we provide a monthly update, unlike most data center companies. But taking a card from the playbook of the Bitcoin mining industry, we actually report monthly updates, and so we actually give updates on the progress of all of the developments of each of our sites. And on a go-forward basis, we actually are reporting this as a separate segment. We already have a 16 megawatt Tier 3 data center up and operational in Austin, Texas. And so we're already breaking this out as a line item in our financials.
Is the company interested in M&A? Is that on the radar screen or not?
M&A is definitely on our radar screen, mainly focused on the data center industry. All of the data centers that have been built over the last 20 years, most of them are not viable for this next generation of compute that's coming to market. And so there's a large opportunity for us to go after many of these distressed data centers, acquire them, retrofit them, deploy our capital, and actually be able to create a new facility that can host the next generation of GPUs.